Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on bullish candlesticks. So when you look at a typical stock chart and you have these candlesticks on your chart, you're going to see green candlesticks and red candlesticks, or you can have them whatever color you'd like. I like having mine as green and red, and the green candlesticks that you see are bullish. The red ones that you see are bearish, right? And again, so it tells a story between the bulls and the bears. You can see some candlesticks are bigger than others that are smaller. And those all tell a story. Each candlestick tells a story within the larger picture. So when you see a candlestick, eventually you're going to get to a point, if you're just learning and you're new, that candlestick can also coincide with other smaller candlesticks and form patterns which form a bigger overall pattern, right? So it's important to obviously start off with understanding smaller candlesticks, like singular ones, and then looking at the bigger overall picture. So this video again is going to only talk about bullish candlesticks. So these green candlesticks that you see. I'm going to focus on the larger ones and I'm going to show you the smaller ones, what they mean in a moment. So you're going to see these candlesticks, and some are just kind of see this big area that you see here. That is called a real body. Real body. So the bigger the real body, the more the more bullish the candlestick is. Doesn't mean it's going to stay going up. Obviously, you can see in this one right here, it went up. It's a big real body that you see here, and then it crashed. So that's why it's important to look at other indicators and what's happening, moving average lines, all that good stuff. But the body, this is called the real body on these green candlesticks. Now, when you zoom in, I'll just zoom in to make it a little bit easier. The bottom parts that you see here, or these little top parts that you see here, those are called shadows. Sometimes people call them wicks. So there's upper and lower shadows. So there's a lower shadow, upper shadow, lower and upper. See, they're all different shapes and sizes. So how that works is this. You take the real body on a bullish candlestick, and the bottom of the real body, like this area here, this area over in here, this one up over in here, that's where the open is. So the open is the bottom of the real body on a bullish candlestick, and the close is the top of the upper body, right up here, right up here, right up here, right up over here. So again, I'll say that again. The kind of the bigger shaded area that you see is called the real body. The open price on that stock, again, I'm just using the daily just to make it easier, is the bottom of the real body, and the close is the top of the real body. So the bottom of the real body is the open, close of the top of the real body is closed. That was a tongue twister. And then you see these shadows, these upper and lower shadows. That is the high and the low of the day. So you can see right here, price opened right over here at the bottom of this real body, closed at the top of this real body, but you can see it had the low. So it fell right here, it had a low. You can see over something like this one right here, opened down over here, closed up here, but it also had, a little bit of an upper shadow. That was the high of day. And you can see when you look at all these candlesticks, they're all different. You'll see many of them have these shadows, right? So you can see this is a smaller real body, right? So you can see this price opened right over here, closed up over here, small real body, but it had a longer low, right? So you have this longer shadow on the bottom here, longer shadow, smaller real body. So just because a candlestick is green, it also doesn't mean, again, that it's bullish or going to stay bullish. Perfect example up here. You have to look at the pattern within the pattern and then moving average lines and see what's happening. But again, this is a bullish candlestick. Be aware of the real bodies, right? The bottom of the real body is the open. The close of the real body is the close. And then these tops that you see on the tops or the bottoms, right? Those are upper and lower shadows. otherwise known as wicks on the top as well. Some people call them wicks, some people call them shadows. Again, just don't get confused by it. Just realize that those wicks or shadows or whatever you want to call them are basically the highs and the low of the day, and the real body is the open and the close, right? So open at the bottom of the real body, close at the top of the real body, and then the upper wicks and the lower, or the upper wicks or the upper shadows or the lower shadows or lower wicks, whatever you want to call them, are the highs and the lows of the day. And as you can see on a chart, it's just a constant battle of the bulls and the bears, right? Just showing you a couple of charts here. That was a Bitcoin ETF, as you can see here. This is the SPX, S&P, and you can see, all different bullish types of candles. Some are bigger than others, and they all tell a story, right? This one right here, kind of a bigger green bullish candlestick. You have the high at the low, or the high, or let me rephrase that. The open is at the low of the real body, and the close is at the top of the real body. And you can see there's a wick up top here, or an upper shadow, lower shadow down here. That's the high of day, low of day. Open at the bottom of the real body, close at the top of the real body. And you can see all of these ones tell a story. Open at the bottom of this real body here, close at the top, high of day at the top of this upper shadow, low of day at the bottom of this lower shadow, and so forth, right? You can see some of them are just bigger than others, and they all tell a story. So these green candlesticks are bullish, the red are bearish. Again, real bodies are the kind of the guts of what you see, the bulkiness, and then the tops and the bottoms are the high and low of day. Again, if you want to call them wicks or shadows, that's up to you. Some people call them, they mix it up, but just it tells a story, again, of the bulls. And so that's bullish candlestick in a nutshell. If you're not a member of our community yet on Facebook, make sure to come and join us. We are the Bullish Bears. You will see we call ourselves the stock market community up here just to differentiate ourselves from our fan page. So make sure you like and follow our fan page to stay in touch with us. Also, too, if you join our community, you'll notice that we keep all the spammers, all the trolls, and all the stock pumpers out. So it's a really good, clean Facebook group. We run a tight ship over there. So if you want to talk to other traders around the world in a really good, safe place, make sure to come and join us. If you have not been over to our website yet, head over to bullishbears.com. The link will be below. You'll see that we offer a lot to our community members. We have several different trade rooms. We have a day trade room, a swing trade room, a futures trade room. Our trade rooms are open 24/7. So if you're working, you could always go back and look at the chat throughout the day. Again, talk to other traders, anytime, day or night. So not only do we have our Facebook group for community, we also have all of our trade rooms as well to really help you with support when you're getting started with trading. Each night we do send out watch list and trade alerts. We are not stock pumpers. We do not call out entries and exits. We help to teach you to become your own trader. So each night we send out our trade alerts with key breakout and breakdown areas with notes to really help you to make your own trading decisions and not rely upon us. And if you want to become a successful trader, that is super important. You don't want to be following stock pumpers. You want to be able to make your own entries and your own exits. So read about how our trade alerts work over here. If you're new, again, we have several $1,000s worth of free courses over here. Make sure to take them. Give yourself a few months to get comfortable with trading. You're not going to make money overnight. It takes time to become a successful trader. So take our free courses and really get comfortable with trading. So if you're not a member yet, you can come up over here and click subscribe. Also, too, before you leave and become a member, make sure to please, if you like this video, like it, share it, comment on it, and subscribe to our channel. So we hope this video helped you, and we'll see you in our community. Enjoy.